Speaking to the investment itself, the decision-making going into the investment has financially three attributes to it. The first two are rather objective. The third one's a little more subjective. First of all, I designed the investment to assure that the investors would be getting some form of immediate return. I wanted the investors to have a current level of income. So they get an 8% dividend on their investment. It's paid 2% each quarter. So if someone does, say, a $3,000 investment, they're going to get $240 a year, and they will receive that $60 4 times each year. These dividends, which are purely out of profits, are becoming quite popular, and people are really relating to them as they continue to invest and invest more. They like that dividend. It's largely tax-free due to the tax advantages that they come to us with new construction and so forth. And as long as this company goes on an aggressive but responsible growth hurdle, these dividends should be non-taxable for at least 5, 6, 7, 8 years. Feature 1. Feature 2, shareholders are buying preferred stock in GolfSuites. It basically means first money out. So at any point in time, we sell this company, we do a major refinancing, we merge, we take it public on a conventional IPO, any of those kinds of things. The first money that gets distributed before anything else goes to these shareholders who bought these Reg A and Reg B shares. Again, kind of an objective attribute. The third attribute is more subjective, and that is that the preferred shares that one buys are valued at any point in time if there's a sale or any other kind of monetization event, and the shareholder gets the greater of what he invested in his preferred stock or his pro rata share of what the company value would be. I tell everyone to not expect any conversion value for the first 3 or 4 years. We move into year 5, 6, 7, we should start seeing a spread where if someone put in 10,000, they might see that grow to 11, 12, 13, and over time even higher. And that's what we call the equity kicker or the growth factor. So again, 3 attributes, 2 objective: dividend, preferred stock, first money out on the objective side. On the subjective side, a gain kicker or an equity participation that comes with the stock, which should be very well expected. Those shareholders who come in today have an interesting advantage over some of the original shareholders who came in early 2019, and all we were an idea. In September of 19, some 6 months into the founding, we took over our Tulsa facility. A year after that, we took over Lubbock, and right now we're opening up Baton Rouge, and we just bought Madison, Mississippi, outside of Jackson, where we will build new. You'll see our growth hurdle pretty much go, kind of do one of these. We're probably like right here now, and ideally where you want to see us is on a nice incline like that, probably opening conservatively 6 locations a year. In my terms, ideally a dozen locations a year. We won't be doing that in the next 2 months, but we certainly will be doing that in the next couple of years. That's basically the investment platform. We're raising money from Main Street instead of raising it from Wall Street. We're raising it under an act that passed 10 years ago called the Jobs Act of 2012, which promulgated some laws and regulations whereby ordinary working Americans could invest in companies that were heretofore secluded or segregated to wealthy investors. This act that came about during the Obama administration was meant to do 2 primary things: create funding for businesses that might have a difficult time doing it institutionally on Wall Street, and at the same time provide investors an opportunity to come in with very small amounts of money and get their little piece of the American dream. It is called democratization, meaning that it's opening up the world of venture capital to really anybody who wants to do it. We have investors come in for $750. We have investors come in an hour later with $75,000. The company has about 2,200 shareholders right now. Some of these people call once a month, talk to our investor services director. Some of them call me. I take their calls. We just shoot the breeze. I don't care who invested how much. I'll talk to a $750 investor for as long as I'll talk to a $200,000 investor. They're both equally important. It's just really a kick. I mean, it is really becoming a family. I wasn't thinking that way. I didn't think that would happen. So you join this, you're investing in this asset, but you're really joining the company in the process. It may sound a little corny, but it really is a very sweet thing. I've been managing investment properties for decades. I have a great comfort in this company in that these investors are just going to be very safe. The management of it is such that they're just going to be very, very safe.